Hi guys, today we will discuss Netflix on the daily chart and I will show you how to trade candlesticks. Now if you look at it, this is the first major green candle, an engulfing bull that has eaten all these red candles. Even before this engulfing bull, it was bullish. Why? Because these red candles were not eating any of the green candles. Just look at them. They were all still bullish. If we move further down, this was a red candle, but the next day it opened up and went higher. So this pattern was nullified. These two candles, engulfing bearish, was nullified. If you move a bit at the back, this ate this candle, but it wasn't that much of a bearish thing. But the point is, now it's bullish. Let's put an icon. And here we go. Now, as you can see, the price goes straight and falls off. Once it falls, we will be booking up a loss and getting out. Now you might say, why the hell did we did that? Because we are following our candlestick patterns. Now this is a huge engulfing bear candle and it is telling us that it can go further down lower. Now let's presume we are wrong. The market goes up. Then even it will be making a candle, a pattern that will be bullish. And just look at it. It opened lower and went higher. Boom, it ate it. Once it ate it, we will be buying it again. Now, the reason it happens so much buy sell is because I believe brokers and hedge funds try to make sure that they short sell it and they make this kind of a red candle so that the retail investor panic and they can grab more shares. Now you might ask, why do they grab and why do we retail investors sell? The reason is prospective. Basically, hedge funds are buying mostly good stocks for long term. So they are buying on the weekly level. Now, if on the daily level they bring up a red candle and then the next day it's eaten by a green candle, then on the weekly level it won't even be showing that it was a red candle. It will be showing a spike down, a shadow down, but that doesn't matter on the weekly candle. Whereas you as a retail investor who is trading on the real short term, example daily, intraday, he will be feeling the pain of this fall because he is trading short term and he doesn't know that on the weekly term the hedge funds have no issue because this will be just looking like a spike for them. And if you look at it, it opened higher and opened lower. Boom. Now the question remains, should we sell? The question remains. Now it looks to me as a dark cloud cover and that's not a good site to be in. So it's up to us to sell or not to sell. Now whenever you see this kind of a choppy trading, as you can see, whatever is happening, let me bring up, wait a minute please. Okay, let's leave that. From wait a minute, why is it doing this? Yeah, from this day, this is 12th August till this day, this is 13th September. This is a month. Since then, it is going straight. It's not moving anywhere. And the next day, it opens higher. So once it closes like this, I would suggest you to wait for the next day opening. Don't sell it on the close. Wait for the next day opening. Reason? Let's presume it opens lower, below this open. Sell. Number one. Number two, let's presume it opens at the same rate. Then put a stop loss on the low. let's presume it opens higher, then this candle is nullified because it was minus candle. That's when it posed an extreme threat. But once it opened higher, then this threat is somewhat gone. Now it is again making bearish Harami cross or bearish Harami. Now that proves that it is not in a good mark. Now whenever you are confused, this is my rule of thumb. Whenever you are confused, put a stop loss on the low of previous candle, like here or here. This is the rule of thumb. Let's presume you have short sold it. Let's presume. Then even put a stop loss on the highest point of that previous day. Reason? Because the price, once it forms any pattern, it tells you that it can move any way. And let's presume if it moves against us, then we should have a game plan. Example, right here, 1, 2, 3, 4, 5. These are 5 days that are breaking pattern after pattern. First, it was dark cloud cover. Then it was bullish candle, bullish engulfing candle. Then again, it was dark cloud cover. Then it was bullish Harami. Then again, it's bullish Haramis, but it's confusing. And then it brings up engulfing bullish candle. Now in confusion, stop loss is your real game. On the highest point, example, this green is the highest point. The high point will be stop loss for short sellers. The low point will be stop loss for buyers. And the market moved up. Now for buyers, as we bought it right here, this is the mark. So we were bullish and the price is going up. So now it's not a problem. Now again, if you look at it, you will consider it a dark cloud cover, but I won't. Why? Let me tell you. Now the difference between the opening and closing here is $2.40 approximately. So $2.40, half is $1.20. That means 98.30. And here it closed at 98.06. Right? It's more than half. Right? But the next day it opened higher. So always look at the opening of the next day. It will really help you understand, okay, is it that the same thing? Because right here on this red candle, small red candle, it opened at 98.78. So it's not more than half. It opened higher, making it a confused candle. And again, the rule of thumbs remain. If you're confused, put a stop loss on the low. As you are buying, this is the buy signal. So we are still bullish. And the market opens lower and drops. Once it drops, you again book a loss. How? Because you had put a stop loss right here on the low, that is 97.04, and this high is 97.10. So your stop loss would have hit automatically, and that's not a bad thing. Now again, it's a bullish Harami. Again, see, small green candle on a big red candle. That means its reversal trend is happening. But we waited, and it again opened lower and went lower. Now, the reason I'm showing you this trading is so that I can help you understand. Now, once we looked at pattern, I told you this is a bullish reversal pattern. But did it reverse? Currently not. Now, through my experience, I will tell you that it will reverse. This is my experience. But I will always suggest you to look at the pattern and then wait for the confirmation. As I, with so much money, wait. Even though I could jump in, but I don't. I wait for the confirmation candle right here. It opened lower, making everyone a fool. Now, you might ask how the hell I knew that this reversal pattern still existed to make the price go up. The reason is, first of all, this was bullish, right? this green candle was also not that bad. It was within the red candle. Okay, not bad. Third day it opened lower, went lower. Yes, it did. But did it broke this low? No. The third day it opened higher. Now this is the thing, opening and closing, that makes every pattern different. Now once it opened higher, it changed this red candle to a small red candle. Because basically, if the opening was right here, this red candle would have been completed. But right here, once it opened higher, it like made it a half candle, a small red candle rather than this big red candle. And once it opened higher and went higher, now it's again bullish. So we will be getting our bullish icon right here, and we will be buying 97.07. Now it went higher and then it went lower, red candle. See? The next day it opened higher and went higher. Now the reason I'm like showing you this thing is, although this red candle is eating this green candle, and that's like a bearish engulfing candle, this red candle, but it's a small candle. Always remember, this is another important knowledge that you need to keep in your pocket. The big and the small candle. The big candle holds more weightage. The small candle holds less weightage. So if you're weighting both these candles, this green candle holds more weight and this small green candle holds less weight. Now this looks like a shooting star, up and down, but once it like eats it, don't like simply jump into sell. This is my rule. I don't jump into sell. Reason? First of all, market since this August 5th, this high is confused. This is September 29th. It is confused since like August, September, 2 months. It's confused. It's not going up, it's not going down, it's choppy. So whenever it is choppy, stop loss order comes in. You will be putting stop loss orders to make sure that you don't get chopped out. And you won't be trading on each and every leg trade. You'll be trying for your stop losses to get hit. Now you can see our first trade, this trade was like in loss, second trade was in loss. Now this is the third trade. So your stop losses will come in unless and until the market crosses this box. Now what is this box? The highest point is this blue line and the lowest point is this big candle's low, and the medium point is this candle's close. So these are three lines that makes it a box, and the box starts from this green candle and is currently like flowing on, and that's what tells us that in a box there is always choppy trading, and that trading always kills your profit. So don't panic and sit tight. Now on this green candle, it gets out of the box. Now you can like follow the patterns, because as per my experience, in a box the pattern strength gets reduced extremely low. Like in a normal circumstances, the pattern can give you an 80% like good signal, but in a box it gives you a signal strength of what, 10%, 8%? It's like 10 times lower. Reason? Because in a box, usually some big player is selling, like he's exiting the stock, and another big player is buying. So it's like bulls and bears fighting. Now they both are not buying simultaneously. What happens is, someone big started selling, let's say right here, it went lower. On the fall, no one was buying. But then someone like new big player came in and he bought here. Then again, the next day he didn't bought. Then he bought something for the next 3 days, and then again he didn't bought. The price fell off. Again he's starting to buy. Now, When it goes beyond this above line, it means he has bought everything. Reason? Because if I'm selling, let's say 2 million shares, then I will have a price in mind that I need to get out at that price. And I will be selling at each and every level. Now once the price reaches again my top high point, I will be selling it. And I will be selling it in loads. Reason? Because I don't believe the price to be crossing this high. So I will be selling the person who is willing to buy. And the price crosses that highest point once he has bought everything that I have sold. Because now I am out and he is the king of the stock. So he will be like considering price to be rising higher. And just look at it. The price goes higher. Now, right here, this is what? Bearish Harami cross. Right? And it's a reversal signal if you remember the previous chapter. But we won't be selling it. Now you might ask, why on earth are we not selling it? Why on earth? Because you need the other candle. Now this candle is also not making any substantial effort to change our mind. But what I usually do, I never sold at this point, but the next day once it opened lower, it confused me and I will sell on this green candle. Reason? First of all, I have good profit. We bought it at what? 97.07 and this is what? 104? That's not bad. That's brilliant. So, it's a good profit. Now, let's move further. Boom, it goes lower. And now it's breaking the low of this candle. That's not good. That means bearish forces are in contact. But you see these are all green candles. And that's a technique that brokers and hedge funds uses. They open it lower and make it close higher. So you as a retail investor always consider through the candlestick point of view, okay, it's green. Green is not that bad. White candle is always good. Yes, but not like that. Green means it should be higher than yesterday's close, not higher than today's open. That's not the technique. That's what they have made the charts, what I call, they have manipulated it. They have contacted software companies and manipulated it. Because this is what I call manipulation. Confusing the retail investor who doesn't know that a green candle or bullish candle is something that opens and closes higher than yesterday's close. It should not be from today's close. No, no, no. And just look at it further. Boom! It opened lower and went even further lower. Reason? Because they were trapping people right here. It opened lower, went higher, but it's closing below yesterday's close. So how can it be green? Again it opened lower, closed higher. Again trapping people. And what was the major concern? This low breaking, and it break, and the next day it went lower. Now from here till here we had a $7 profit. That's what? 7%, 8% profit. And in our initial struggles, this was what? 99.48 and this open was 97. So $2.48 loss. And this was what? 100 and 96, 97, $3 loss. So $6-7 loss. So now we are break even. That's the point. So in Candlestick, it will help you make money. Now the point is, this was a box, and in a box, as per my experience, you always lose money. You always lose money. This is what the box is designed for. Now just look at it further. The price falls. Now this is a dark cloud cover. See? But my experience says dark cloud cover is bullish. So you can buy it. But always put a stop loss on the lowest point of a dark cloud cover. This is the rule of thumb. Now we are buying it, but remember my words. Stop loss at the lowest point of the candlestick, the green candlestick on which we are buying. And if you look at it, it opened higher. Boom. Now this red candle, although this looks like a red candle, but it's higher than the close of this red candle. So it makes it a like bullish candle. It's not a bad candle for you. Now it's opening lower. Now you might call it a morning star or like the morning patterns, but I wouldn't call it like that. Reason? Because in a morning star pattern or other morning star patterns, usually this green candle should be eaten by more than half. But is it? The body is extremely small. So will I be selling it? No, because I needed it to eat more than half. Now what really like happens is, this is another manipulation technique. If I was buying and I need to buy huge shares, then this is my type of fall, manipulation trap. I will make sure it opens and it eats more than half. Number one thing, but it's not closed. The market is open. So in the open, you as the retail investor will see, okay, it has eaten more than half. I should jump out of the trade and save money. And some of you will place their trades, and I will buy their shares and make sure that at the end of the day it closes higher. So on the close, this candle is not something threatening. But most retail investor would have sold to me, helping me buy more. Why? Because they didn't wait it for the close. And you should not make this mistake. And just look at it further. Boom! It opened higher and closed further higher. And we bought it what? At 123. This is what? 118.79. Now, this is a huge gap. An extreme huge gap. Usually price does come down to like fill it. But wait for the pattern that says get out. Now this is 3 white soldiers. More bullish. Don't get out. Wait. 4. Boom. This says sell. It is a black candle engulfing bearish eating this candle. Now you might say I told you that this was small candles and eating it was not that bad. But I told you to place a stop loss on the previous white candle. Now this is what I told you. But just look at the individual trade circumstances. The individual trade circumstances says that this is a gap and it can come back to fill it. Now if it comes back to fill it, then you should not be sitting in it, because your profit is so much used from 100 till 124.87 that you should book it. Why leave 24% profit on the table? Why not book it once it's telling you? I told you that smaller white candles were not that great, but the circumstances right here, once I told you it was not great, we bought it just at the same rate. So we had to take a bit of a risk to save our profits and not to increase our losses. But right here, we are in extreme profits. So why do we take that risk? In the next lecture, I will discuss 4-hourly chart and I will show you how all candlestick trading works on the intraday level.